In this video, I'm going to talk about interactive brokers, some of the good things and the bad things. So interactive brokers is one of the stronger do-it-yourself DIY platforms in the world. And there's a lot of good things about it. It can accept for so many countries globally. It has all the assets you might want and so on and so forth. So it is a very strong company in general, and I wouldn't say anything particularly bad about them. However, I see three big problems that will affect many people, but not everyone. The first big issue is the American angle. Now, technically speaking, if you fill out a form, W-8 form, and there's some others, you shouldn't have to pay US taxes on death taxes, or indeed on domiciled funds like withholding tax and so on. However, there's undoubtedly some risk. I don't want to say if it's 2%, 5%, 10%. If you die, your beneficiaries will be brought into the whole US spider's web of taxation. So in general, for non-Americans, it is better to seek a broker which isn't actually domiciled in America. For Americans, this point is not relevant. You should be happy the fact that it's actually based in the United States. Now, number two is usually you can't pay by card on interactive brokers, especially if you don't have a US card. So most people need to send by bank transfer. That means that doing monthly investments is not really practical unless you're going to invest a lot of money. You take it, if you want to invest $1,000 a month, for example, and you're sending by bank transfer and it's costing you 20 or 30 every time, plus there's a bit of a fee maybe for buying and selling, some people could be spending as much as between $30 and $50 every time they send money. So if you were doing $1,000 a month, for example, that would be 3 to 5% of your money gone, not to interactive brokers, but because of the fee for transferring your money. Even on, say, 5,000, as an example, it could be as high as 1%. That's quite a lot when you consider some advisor-led platforms can charge about just over 1%. And in addition to that, you don't always have the credit or debit card fees, because some of the advisor-led platforms, it's free to buy and sell by credit or debit card. And finally, but this is a bigger point about DIY investors more generally, Vanguard, of course, one of the biggest investment companies in the world, and indeed one of the biggest DIY companies in the world, at least if you're living in the US and the UK, did a study, and I'll put it below. It's called Advisors Alpha. And to cut a long story short, what they have found is that clients that use advisors get superior results. In other words, even client A who invests by themselves and they're in Vanguard funds, and client B who's also in Vanguard funds but they have an advisor, client B will do better on average than client A. And you might say, well, how is that so? Because client B is in the same funds or similar funds to client A, but they're paying less. And there's a simple reason for that. There's a one-word answer: emotions. Now, everyone says things like, oh yeah, I know you shouldn't panic sell when the stock market goes down, or I know nobody can time the stock market. But you wouldn't believe how many people I've met who say things like, oh, I've read Jack Bogle's autobiography, The Vanguard Founder, or I've read such and such, and I know it's a great way to invest, blah, blah, blah. But this time is different, right? Or, oh, but this time, what happens if Trump will get elected? Or it's always something new. And it's almost like a carousel. If you've been doing what I've been doing for a long time, you see the same things over and over again. So in 2016, people said, I'm a bit worried about Trump getting elected, so I don't want to put more into my Vanguard account or my Schwab account or whatever. Then 2020 comes along and people say, a bit worried about the coronavirus. Then later in the year, they say, oh, I'm a bit worried about this US election, you know, if there's a disputed election. Oh, I'm a bit worried about a second European lockdown. And guess what? What was the best month this year? November. And what happened in November, even before the vaccine? There was a second European lockdown and a disputed US election. We didn't know the winner for 4 or 5 days. And markets absolutely skyrocketed by about 15%, completely unexpectedly, in the same way 2016. Hardly anyone, even Trump supporters, thought the markets would skyrocket, but they did. So nobody can predict or time markets, yet most people, even if they say they won't do that, they do it. So for example, Schwab, I believe, they released a survey that showed between 35 and 50% of their clients panic sold. So 35% sold between February and May, and another 15% or so, I think, sold a bit of their portfolio. And indeed, Vanguard have confirmed the net inflows, in other words, people buying, net inflows to their funds were highest during 1999, and they always go down in 2008 and 2020. And not all of that is because people are losing their jobs. Sometimes it's just panic. So a lot of studies out there have shown that for emotional reasons, people get much worse results investing by themselves. Don't get me wrong though, I think there's at least 20% of people, maybe between 20 and 30% of people, who can be extremely disciplined and they don't need an advisor. What's shown, what proves that actually is dead people, actually, believe it or not, perform much better than the living when it comes to investing, because they can't panic sell, they can't read the media, they can't read an article about COVID or whatever. So actually, if more DIY investors either used an advisor or behaved as if they were dead, in other words, they didn't even check their account at all, they just left their account sitting there, they would actually do much better. I mean, I was talking to a friend a few months ago, and he was saying to me, Adam, I have an investment account and I completely forgot about it. I must have taken it out 15 or 20 years ago. It only has about 5 or 10,000 in it. And guess what? I was checking that account because I got an email out of the blue, and it's doing better than any of my accounts have ever done. Because basically he forgot it was there, so he may as well have been dead, right? Because he wasn't even checking his account. So the point is, and I've seen it on Interactive Brokers, and it's not just Interactive Brokers, a lot of people are trading on emotion. And that isn't just panic selling. It could be, oh, I like Elon Musk, so I'll buy Tesla. And it's not based on any rationale, as an example. So controlling your emotions is actually, I think, is the single most important thing in investing, even more than actually technical knowledge.